Well, here we go again. Today, the market is up 582 points, the Dow, after a 2,000 point decline yesterday. And the question to me has been, what do you do? Do you buy the dips or do you sell the rips? So today, I sold the rip. In one account now I'm flat. The other two I'm 40% in cash. No, 60% in cash, 40 equities. So why would I do that? The first thing that comes to mind for me, and I'm a firm believer in this, is the math of losses. So the more you lose, the harder it is to get back. And is it possible in my mind to actually go down 50% and have to make 100% to get back? I think it's a possibility, and that in itself makes me not want to be in the market. So the other issue is they say, okay, stay in the market, it's going to come back, everything's going to be good, and you're going to, if you miss the 10 best trading days, you're going to be really messed up. So this is a graph that looks at that. The green is if you miss the 25 worst days. The red is missing the 25 best days. So obviously it hurts if you miss the 25 best days, but it really hurts if you actually get the 25 worst days. So that in itself, I look at this buy and hold and hang on forever with a grain of salt. I would much rather preserve capital and miss out on a 5% upside. I'm not going to be in cash forever. It's just that I don't like the market action. And in the past couple of days, I've kind of looked into a threat analysis, and I am, I came to the conclusion to sell the rip. One of the things that really I've been checking on this coronavirus. How bad is it? What is going on with it?
Yeah, I think we've reached a predictable tipping point where there's going to be a rapid acceleration in cases here in the United States. We still have a narrow window of opportunity to implement tough mitigation steps that could prevent a very large epidemic in the United States, but we're losing time, and we need to start taking more aggressive steps right now to try to contain the large outbreaks that are in probably multiple U.S. cities right now, to prevent a broader epidemic and try to get to a point where we don't exhaust the healthcare system. The goal is to try to make sure that the peak of this epidemic, and we are headed for an epidemic here in the United States, doesn't become so large that you get to a point where you've exhausted the healthcare system. And that's what happened in Wuhan, China. When they exhausted their healthcare system, that's when you saw a rapid acceleration in the fatality rate in that region.
So what does that look like, though, just so we understand?
What it looks like is widespread school closures in areas of outbreak, closing businesses, closing places where people gather indoors like movie theaters, shutting down large events, asking businesses to have workers telework. But you also have to step in with assistance, not only to assist the localities and the states with money from the federal government, but also people who are going to face significant hardships from these measures. We should do this up front as an inducement to get localities and states to take these tough actions. We're going to end up with a massive fiscal package, a bailout on the back end of this. We are better off using that money up front to help buy some of the actions that we need to mitigate this epidemic rather than spending that money on the back end after we've had a very large epidemic. We'd be better off spending that money now to induce the kind of actions we need to see.
Scott, where are we talking about? Areas that are affected, obviously, that would be Kirkland, Washington, but are you talking about Westchester, New York at this point? There's many outbreaks all over the place.
Yeah, it's broader than that. I mean, there is the potential that if we don't take tough measures right now, we could be looking at tens of thousands of cases in the United States. That's not unrealistic. If you look at the number of cases in Italy and Singapore, and you apply that over our population, you're looking at tens of thousands of cases in the United States. We have multiple areas that are dense population centers where you could see widespread transmission.
So should we be going to school and work in places like New York City and Westchester and other, just very broadly, should these things have already taken place here or no?
Well, the good news is businesses are implementing mitigation steps. I mean, the private sector really has been leading here, trying to engage in social distancing and reduce the opportunities for rates of transmission. It looks like there's a large outbreak in Santa Clara, California, Seattle. New York might have a large outbreak. There's going to be outbreaks in multiple U.S. cities simultaneously. That's why we're well past the point of containment in the United States. And large quarantines and lockdowns like what they did in Italy and China won't work here. We're well past that point because we now have this seated in multiple U.S. cities.
It won't work here. Okay, Dr. Scott, hold on for a second. We want to get to Dr. Borio in just a moment, but I know that Meg Terrell has a question that she wants to jump in with.
Oh,
Meg?
Andrew, thank you. And Dr. Borio, it's a question for you. I'm just wondering how you would assess the testing capacity in the U.S. right now. We are seeing commercial companies now coming online. How are we doing? How would you assess the messaging from the government on that? And where do you expect us to be by the end of this week?
Well, so the good news is that today I believe the commercial developers, the big ones, are coming online and the capacity is going to increase significantly. The bad news, or the good news, is that we're going to be able to find a lot more cases that we know have been circulating in America. And we're going to see how steep this epidemic curve is going to get. We are doing what we can to enhance social distancing. Now, the degree with which we implement those measures may vary from locality to locality based on the number of cases. And the way I see this is a lot more like a shutdown, a partial shutdown, but not a lockdown. We should not be talking about lockdowns in America.
Do you think what happened in Italy was the right decision or wrong decision?
Again, the way I see this here is that we need to, the goal is to have social distancing. Lockdowns would not do anything to enhance social distancing for the population that is under lockdown.
Okay, that's one thing I'm thinking. This coronavirus reminds me a little bit about a cancer years ago. Initially, people, I think they call it consumption, and people would die of consumption. Then all of a sudden they figured out it was cancer, and then when they figured out it was cancer, there's the number of people that had it just blew up. I mean, it became something real. I think the same thing that happened then could happen now is they have more testing kits. They're going to find more people that have the problem. The next thing that really kind of bothered me was from Kyle Bass. This guy's really smart, and whenever he talks, I listen. And I'm trying to get my head around economically what could happen, what is going to happen. Nobody really knows, but you can draw your own conclusions.
I think that our market has a lot of this virus factored in. When you look at where airline stocks are trading, when you look at cruise stocks or cruise liners, when you look at anything that has a large public presence like theme parks, you already have a pretty significant recession priced into these stocks. So anything better, any turn in the number of infections once we get everyone tested is going to be a very positive event. I guess the question that we must have is how many of these companies have enough cash to make it through that divide, and some of them do, some of them don't, but there will be some amazing things to purchase on the back end of this. We as a firm hope, and we as a country hope, that we don't see a resurgence of the virus in the fall, because as we all know, the thing that worries me the most about this is there are only about 940,000 hospital beds in the U.S. At any moment in time, there's 600,000 of them being used. There's 340 million people in the U.S. We can't have any kind of significant infection with any kind of acuity here without having real problems with the number of those that need to be hospitalized.
Hey, Kyle, you said that there would be big bargains to be had at the end of this. Are you buying anything today?
I agree with some of your earlier guests, so I couldn't see. I do think it's too early. I think that we haven't gotten around to even the first round of testing in the U.S. You have a number of cities that immediately declared states of emergency that really don't have any significant confirmed cases. I think you're going to see the ranks of the U.S. start to put up, a few thousand confirmed cases right away, and that's just because we're behind on testing. So I think peak virus, if you're asking for when the financial markets see peak virus, I think it'll be about a month from now.
So, Kyle, does that mean that you are selling into this?
I'm definitely not selling into this, but we are. Look, there are a few companies out there that are going to do
really well on the back of this. I'll give you one example. Six Flags is a theme park company, and these companies are heavy in real estate. They have great operations around the country, but it's just like an airline. You can't have revenue disappear when you have such a large installed fixed cost base. So those companies are going to be the most convex on the way down. They're also going to be the most interesting value plays once we see peak virus infection rates.
But if you think there's a month to go, what are you doing between now and then?
I mean, watch one of the most interesting financial collapses that we've seen, right, in the last 15, 20 years. This isn't 2008, right? Our banks aren't going broke, but there will be places around the world that never recapitalized in the last crash. You think about Europe, the ECB never recapitalized the European banks. So if you look at where European banks are trading today and where they will be in the next 6 to 12 months, Europe's going to have a real problem. Italy, their banks are basically going to become insolvent very quickly. Italy's got north of 130% debt to GDP, and they have no capital in their banks. And so what's happening in Italy could be the knockout punch for Italy, i.e., either we're going to see a default within the Eurozone in Italy, or we're going to have to see the Germans... Yeah.
I'm sorry, go ahead. Finish that thought, but they're wrapping. I want to ask you just one more thing though, after you finish your thought. That's why I was interrupting, but finish your thought. Germany.
Yeah, sure. So I think places like Germany will have to change the capital key, and Italy, ECB is going to have to go in and really help Italy and let them expand. And then the other economy at risk is Hong Kong, the most levered developed.
Okay, now we're in the area I wanted to ask you about. So China, we've had you on many times talking about the trade war. What does this throw into the entire mix? Do you believe the numbers that you're hearing from China? Did they handle this and cap it? Should they be reopening the factories and theme parks and everything else at this point? Do you believe the numbers?
Yeah, what you learn about the Chinese Communist Party is they don't care about their people as much as they care about maintaining power. And I think they know that if their economy stays too low for too long, that it's a crisis for leadership from the power perspective. So they're telling people to go back to work entirely too early, and no one believes any of the numbers coming out of China. And it's interesting, right? The first thing the Chinese government did was they arrested the 7 doctors in Wuhan that found this virus in the first place late last year. They not only arrested them, they forced them to issue an apology, and then they, quote, punished them. God only knows what they did to them when they punished them. And somehow the WHO is lauding China for doing the right thing and taking charge of this virus when all China did was do a major cover-up for God knows how long. So I don't believe any of the numbers out of China, but what's most important is China's banking system is 3.5 times its GDP. You know, Hong Kong's banking system is almost 900% of GDP, and their economy is off. So you've got, what we're going to see is something worse than the 1998 Asian crisis over in Southeast Asia, and I think the epicenter will be China and Hong Kong.
Okay. That's what I want to get to.
Thank you, Kyle.
Well, there you have it. After going through this research, I concluded I don't want any part of this. And so if I miss 5% of an upside, that's good. So I hope this is informative to you. There's nobody that says you have to be in the market. You don't. It's your decision what you're going to do. I did my due diligence and concluded I don't like the looks of this. I don't like what's going on, and so I'll just sit on the sidelines until we get a turn. So that's my thoughts for the day, and I hope that helps you out make decisions that you're going to have to be making probably sooner than later. So y'all have a good day. If you like then hit the subscribe button, and I'll be coming on different times to give you my thoughts. Thank you. Have a good day.